Hi, this is Randy Finney with the right side of the chart, and this is a quick market update for Tuesday, September 11th, 2018. I just posted about half an hour ago. I put up a post on the front page of right side of the chart, and I wanted to follow up because I think these levels that I posted are pretty significant. And what I said there is, well, let's just review the charts, and I'll tell you right now what I said there. So today we saw a pretty impressive reversal in the Qs. A nice about a 1.6% gain from lows to highs. So we gapped down. This is a 1 minute chart here. Here, I'll give you a clean board. Somewhere I have a clean board on the 1 minute chart. There it is. So this is here's our close yesterday, that dotted yellow line right there. So we gapped down to the tune of about 0.75%, dropped almost 0.7%, and then had a nice reversal. And so the post I made about half an hour ago, what I wanted to point out, and I'll do right now, is the fact that we've hit some significant resistance levels. And although anything is possible, that's the thing about the markets. I can tell you this is probably about the most objective uh, time, or will be probably the most objective and last chance for a shorting op. If you think the markets are going lower, and if they are going higher, then the thing is, it doesn't have to do much to really undo the bearish technicals that have occurred recently. In other words, what we're looking at here, I just jumped out to a 2 hour chart, 120-minute time frame, meaning every candle is 120 minutes. Here, let's zoom in a little bit there. So this is again the same trend line I've been harping on for a while. I've showed this on the daily time frame for QQQ. This is a 120-minute chart. It shows very clearly. So April 2nd, right around April 2nd or 3rd, we had this low here reaction, and here's that trend line. We broke down recently, and the point that I made today is we're back testing that trend line right now, or we're shortly. We're right on it, give or take. I mean, these trend lines can be moved a little bit. You have some candles that pierce a little bit above there, a little below there. There's a lot of volatilities with Qs, but this is essentially a back test. So now, if we go much higher from here, then what will happen is this breakdown that we had so far will prove to be a failed breakdown, a false breakdown, and that's pretty bearish. That's a bear trap. Um, what I pointed out in the post on the site earlier today is we needed to, and I made mention the other day, I think in one of the videos, if not, it was on the site, that we were oversold on the 60-minute time frame. And oversold, you usually have to bounce. And during an uptrend, that's a great time to go long when you're oversold on a 60-minute time frame. Pull back to support, that's a great chance to go long. However, once you break down, oversold tends to become more oversold. You get these fleeting bounces, and again, this is a back test of support. So unlike the previous oversold readings, this one I'm not looking for as much of a rally. Again, assuming that this whole scenario plays out and we fail here on a back test. But all I can tell you, can't tell you if we're going higher. We're going to take out the recent highs, but I can tell you this is probably the most subjective and last shorting up. Because if we do reverse here, and that's what I'm looking for, if we do reverse off these levels, that will most likely do the trick. You'll have a confirmed failure on the back test. If we take out these recent lows right here, that we can, last couple of days that we've consolidated in this tight range right here, that would probably accelerate the selling. At that point, you'd probably see selling start to really come down. This is impulsive selling. That's what you'd probably see here, down to the second target. Remember, my first pullback target was already hit. I was calling for that up here a while ago. First target was uptrend line. Second target is this 177, 76 level. And keep in mind, on different time frames, I'll use different price targets. This is for an active trader, and these aren't hard targets. These aren't official targets. These are just actual support levels. I could probably even tighten that line up a bit there, and we'll call it 178, 177.90. So that's what I'm looking for. Let's just watch what happens here. If they can build on this rally today, or into tomorrow, or the rest of this week, then we've recovered that trend line on QQQ. And let's just take a quick look at it on the daily chart. This is that same trend line. Here's your uptrend line off the early April lows. There's a breakdown and back test. So you can see on this trend line the way I have it drawn, and it's pretty clean. Kept capturing those reactions. In fact, I could tighten it up just a bit there. Yeah, it comes in real nice on all these other candles here off the early April lows. And you can see so far it's simply a back test of that trend line. Now, let's not forget, and this is what I've highlighted, uh, XLK is a near mirror of QQQ. XLK is a technology sector ETF. It has almost all the same holdings, and I often jokingly say the QQQ is simply XLK with an Amazon kicker, because Amazon's such a big weighted component in there, and XLK doesn't have Amazon. But as you see here, and I mentioned that, to really seal the deal, if you will, put a nail in the coffin, we need to see two things break down. So although we had that breakdown on QQQ, like I said, there's a couple things that have given me pause. And if and when we get these sell signals, then I think that will open the door, open the floodgates for a pretty good move down. And that is, again, this uptrend line, the same. It's a comparable uptrend line on XLK. We have not broken it. I highlighted last week. I've been highlighting it for a while now, but I highlighted it last week. We tested it there, almost tested on Thursday. We definitely tested it on Friday. You can see there. Tested it again yesterday and again today. So there's one, two, three successful defenses of that trend line. But again, we're pinching towards the apex of the wedge. There's these divergences which have me favoring a break of this trend line, whether it happens tomorrow, this week, or a few weeks from now. But if we hold here and QQQ recovers that trend line, then we might go on to make new highs. And as I talked about, these divergences might have to be extended. But as of now, I'm still leaning this towards that a breakdown of that trend line soon. And again, the other big one is Amazon. Amazon, again, one of the largest, second largest stock in the world, second largest component of QQQ, I believe third largest of S&P 500. And there it is, very well-defined trend line. And so far, it's still above it. So that's what I need to really give a check. And you have to give the benefit of the doubt. This market's been strong. I'm leaning towards that breakdown, but it hasn't occurred yet. So call it a setup, if you will, a short setup. And if you want to, again, take a shot at a QQQ short on the back test of that trend line with a stop not much above the highs, that's certainly objective. But probably the best way to go about this is maybe keep things light now. Whether you're shorting or you want to hold off, and then wait for these confirmed breakdowns here on both Amazon and XLK, as well as a reversal there in QQQ. And the other chart that I pointed out in that update on the site earlier today is this level. If you've watched my recent videos, you'll know I was harping on this level, really watching this right here. It's about 228.94. This is the ES, by the way, the ES 60-minute chart. ES are your S&P 500 E-mini futures, and there it is. So this was a very significant support. So just to recap, we had a bearish rising wedge pattern right here on the ES, the S&P 500 E-minis. We broke down, back tested it, and we continued to catch support at that level there, that 28.94, broke below it, back tested a few times, moved lower. So really, if you want to take a look at it this way, we're boxed in this sideways trading range recently, sandwiched between the 28.94 level and about the 28.65 level. So this is your key support level. Very bad if S&P or ES can't hold it. You can see that's defined by these reaction highs, and that level. So if we pop back up above there with conviction, I'm talking a solid daily close or at least a very solid 60-minute close, preferably a daily close. No bueno for the bears right there. If we break down below this range impulsively, no bueno for the bulls. So that's as simple as that on ES. And most importantly, like I often say, resistance is resistance until and unless taken out. So, despite the bullish nature of this reversal, it's really not. And if you zoom in, you look at the daily chart or the intraday charts. These rips. There's a comparable rip, or dip, I should say. There's a rip. This is sort of, I don't want to say the norm. In fact, it's not the norm. I pointed out in the trading room today. There was an article in the Wall Street Journal that came out, or a little brief headline that stated we've been in the lowest period of volatility now for in the S&P 500. I think it was for the past 50 days. Okay, I found it. Here it is. The S&P 500 has gone 53 trading days without a move of 1% in either direction. That is the longest such streak since January. In just the fifth time, the benchmark index has moved less than 1% on 50 consecutive days in the past 5 years. And the last time the S&P 500 went this long without a 1% move, you got it right here. Doesn't mean history is going to repeat, but that was it, leading right up there to that January high. So this, low volatility, low price compression. From that usually comes big moves. Same thing if you guys, if you're familiar with the Bollinger Bands, and you put a Bollinger Bands up on charts, when they pinch, it's usually big moves that come out of the Bollinger Bands contracting, and that contraction comes from compressed price volatility. Now, the thing about it, it can go either way. When the Bollinger Bands pinch, you can break either way. So bulls, this is what you want to see. You want to see an upside break, a big move coming out of this low period of volatility. Bigger picture, still tells me, or indicates, I should say, indicates that the next big move is coming, will be to the downside because of these big divergences. Again, from that January high up into these recent highs, we have been building some very strong negative divergences. You can see here as well. But right now we don't have anything, strong sell signals on the, or any sell signals I should say, on the S&P 500 daily time frame. I showed you again on the 60-minute chart of the S&P 500 futures, we are at resistance. And all I can say, if you're an active trader, that it is objective to short a bounce back into resistance. And if you're a long side trader, maybe take a break above those resistance levels that I showed you. If the QQQ manages to regain that trend line, especially on a solid impulsive break or a daily close, if ES manages to punch back up against that resistance level, you might see a short squeeze there. But as of now, like I said, I continue to favor more downside in the coming days to week, especially in what I'll be looking for here. Again, it's not too complicated. I'm looking for an impulsive reversal. I want to see us reverse off this level, come back down here, and then a break under these recent lows. That should really do the trick. Since we had a period of consolidation here, this was a little mini battle between bulls and bears. So let's see who can win that one. And that's it. We'll watch those levels. Until then, I don't want to read too much into it. We could back test for a little bit longer. Sometimes when you back test, you might back test for a few days before rolling over. But there are your levels. And again, these are some micro levels. This is a 60-minute chart of QQQ. This is minor resistance there, about 184.86. But again, I want to watch this trend line. And it's also this level here. I think this is a pretty good big level, 182.64. That had capped all the advances so far in this trading range. There was a gap right there. There was a reaction high there and a reaction high there. So if you are shorting today or already short, or if you're long, what you don't want to see if you're long, and what you do want to see if you're short or shorting, is a move back down below that 182.64, back into this trading range here on QQQ. I showed you it a little bit different on ES because those are the futures, and that's why I like to use both charts. The futures give you a better picture of what's going on even before 9:30 when the market opens and 4 o'clock when it closes. All right, that's it. Let's watch those levels, and we'll take it from there. This has been Randy Finney with Randy Finney with the right side of the chart. You have a great day.